Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday market moves, what happened last week in the markets, and what I expect for next week. Alrighty, let's go to the charts. Starting out as always with the S&P 500. So we hit new all-time highs in the S&P 500. Pretty exciting. Up 1.5% for the week. The new all-time high intraday was 6,395. So new all-time high, pretty impressive. Now, I ran a Fibonacci extension here, and without getting too far into the weeds, I ran a couple other ones, and I keep coming up with like 6450, kind of bouncing around that range right there, 6450. So that looks to me about where it's going to run up against the next level of resistance. Is going to be around 6,450 for the S&P 500. Looks good to go higher next week. I mean, like, how much further can we get into the clouds here? The RSI is 76. MACD is way in the clouds. But the chart is pointing up, so we'll see if we can continue this rally in the S&P. No tradable setups that I see here at all. And the dollar, the DXY, is down 0.8% for the week. I think we might get a little rally here in the dollar on Monday. Looks to me like it's probably going to pop up just a little bit. I do think the more I look at this, the more I think that this channel is going to fail. And I think we're probably going to correct down, and we might even get down in here into the 90 or maybe even lower, maybe down in here into the 70s or the 80s. This is a tricky one because you're comparing the dollar against 6 other fiat currencies in varying percentages. So basically this chart is saying is how is this going to hold up against the euro, the Swiss franc, the Japanese yen, etc., right? But I would guess that this channel is probably going to get broken and settle to the downside, although next week I don't think it will. I think it'll pop up. All right, and the U.S. 10-year Treasury, this is what we call the benchmark for the cost of money. So last week I thought that this would come back down for a double bottom. We got that. I thought 4.35 was the level. It hit 4.33. Good enough for government work, and this is the government here, right? Bond is short for bondage, which basically means that we, as a society, like to put things on a credit card for our grandchildren. So that's what these things are right here. As far as what this is going to do next week, I think it's probably going to go up. A little bit of a fundamental argument here. Let me share my screen here, and we will go to... We have some of our favorite people on the planet are meeting next week. And who could that be, do you say? Ben Affleck, Matt Damon? No. Our friends at the Fed are going to have their meeting, and we can look at the CME Fed Watch tool to get an idea of what they're going to do. And it looks like, as of this moment, I'm recording on Friday evening, 97.4% of traders think that they are not going to change interest rates, and they're going to pause. So this is 4 days away. By the time you guys are watching this, it'll be 2 days away, and you'll have an even better idea. But there's very few people that think that they're going to cut rates, and no one thinks they're going to raise rates. So time will tell, and we shall see. All right, let's go back to our favorite thing here, the charts. Gold is down 0.7% for the week, so still just hanging around this 50-day moving average. This blue line right here is the 50-day. If we go out on any other of these time frames, this now becomes the 50-week, right? And this green line becomes the 20-week moving average, but we're on the daily here, so it's the 50-day moving average. And that's kind of just been hanging around gold right there. So our forecast of it kind of sideways to down seems to be close. It's more like sideways to up. So it's just kind of sideways grinding with little up ticks here. So since this time down, we've had a little series here of higher lows and higher highs. We'll see if that holds or not. I don't think it will. I think we're going to break this little trend line here. So we need at least 3 points for a trend line, right? And if we connect this perfectly right there, we'll see that it looks like it got broken on Friday there. And let me look at the weekly candle. Yeah, now that's a pretty bearish weekly candle right there. If I, oops, what did I do? There we go, delete. If I zoom in on this, make this bigger, and you can see maybe if I make this a candle, it'd be easier to see. That's a pretty bearish looking candle, right, on gold there. So my bias for next week would be down. I mean, we'll have a little bit of support here around 3,300, which is only like 30 bucks away. But I got a feeling it's going to go through that. So hopefully we will get a little bit of a washout here in gold. I would love to see it come back down here to the 200-day moving average, because then we can get some of these gold juniors that we have all been eyeing. All right, and gold divided by the S&P 500 as gold underperformed the S&P by 2.1%. I still think we're going to see this hit the 200-day moving average. I think that, I think that's fairly likely. I think it'll come back down to there. It may even go through that, and we might hit this kind of green trend line that we've drawn there. It wouldn't be the end of the world if it did, although I'd prefer not to see it get below this 50% marker. But yeah, we'll see if it does or not. If I had to guess, I think that's going to stop right here on the 200-day, but we'll see. All right, and for the new guys to the show, you want to start here if you're going to bet on gold. This is PHYS, and this is physical gold on the stock market. Basically, what you're doing is you're buying into shares of a warehouse full of gold bars, and you get a little cut of that. And not something that you're going to redeem or anything. You know, if you want a little more safer play, then definitely buy like the gold coins and bars. But for a mouse click, this is pretty snappy. Now, this one, I got the limit order set here. So if you're new, this is red line, yellow, and green, right? Green is kind of like your back up the truck moment. Not likely that the price is going to get down to this level, but if it does, it means it's a really good deal, assuming something didn't fundamentally change in the narrative. Like if all of a sudden, you know, if price action gets down to here and you hear news that they balanced the budget and the Doge committee succeeded and actually cut $3 trillion in spending instead of only, 50 billion or whatever, then all bets are off, right? But assuming none of that changes and we just have some kind of liquidity crisis or something, this is your back up the truck moment whenever you see these green lines, right? Okay, so right here, first limit order at 25 bucks, then 24.25, and then $23. And remember, as you go down, you want to be buying more. So I would do like a 10 or 15% position here, maybe like a 30, 40% position here, and then the rest of your position here, like 50%. Okay. All right, and GDX. Okay, so this one's interesting because this one's up 5.5% for the week. So gold was down 0.7%, and this one's up 5.5%. So the miners are outperforming the metal, which is kind of cool. This one actually looks, although gold looks to me like it's going to go down, this one actually looks like it's going to go up next week. So that's pretty cool. Stefan says, thanks for adding the videos to Spotify. You are welcome, sir. I'm glad you like them. So I know some of you guys like to watch on Spotify. If you do, head over there. We've been on the audio version of Spotify for a while now, years I think. But yeah, now if you want to watch the videos over there, you are more than welcome. Okay, so this one, first limit order I like at $50.50, then 46 bucks, and then 42.50. This is probably not going to hit. I probably need to move that one up a little bit. But looking good for GDX next week. I like that a lot. That kind of a bullish flag pattern here that might be actually breaking out. So we'll see if it does or not. We will know next week. GDXJ up 2.5% for the week. So this one also looks to me like it's going to be going up on Monday. We zoom in here, we can see this candle right here is definitely a bullish looking candle, kind of coming in for a quasi double bottom right here on the 50-day moving average. So I like this one to move up next week. Yeah. I just got back from the Rule Symposium, so the interviews continue to roll out. Last week we had Emperor Metals, Riverside Resources, Laura Exploration, Leonard Wright. He wasn't at the symposium, but he's a money manager I interviewed. And then we interviewed Joe Mazumdar, our resident geologist in the Rule classroom. So also Matt Order, our resident coal expert. So lots of content. Be sure to check them out. If you want to watch the replays of the Rule Symposium, there's a link down below, or go to stevebartonmoney.com. I was also a busy little bee. I was on the Peter Granite show, and I was interviewed by Charlotte McLeod of Investing News Network. So thank you to both of them for interviewing me. That was a lot of fun. It's a lot of fun on the other side. You know, I'm so used to the one asking the questions when, you know, you don't know what questions are coming up, or it's fun. I enjoy being on the other side as well. It's cool. So you can check out those episodes by going to the post tab in the on the YouTube channel, or if you're part of the newsletter, it'll just be clipped in right there. So next week, we still have an episode a day coming out from more companies from the symposium. I won't be doing any interviews. I'm going to be traveling with the family, so eventually you'll see a travel video. I know some of you guys like those. I'm doing it more for tax benefit, but you'll see a travel video coming out. So keep your eye out for that. All right, and silver is down 0.3% for the week. So had a really nice sell-off on Friday. Was hoping that this bull flag would play out up to 41, but as soon as it kind of lost momentum here and did a little dip, it was pretty unlikely that that was going to happen. Now it looks like silver's going to be working its way down. If we go to the weekly here, that's a pretty bearish looking candle. Okay, so remember what the other bearish looking candle looked like? That one's pretty bearish too. I think if it was bearish engulfing, meaning that it would engulf this entire candle, then it would be even worse. But yeah, not looking too good for silver going up the beginning of next week. Only thing it's really got to catch it right here is that 20-day moving average. After that, there'll be a little bit of price action here around 37.40 or so. Got a bulk of price action down here around 36, 36.50. I'm hoping it gets down here to 33. That would line up pretty nice with the 200-day moving average. And in my mind, that's where I really want to get kind of aggressive on some of these junior silver miners because I think that's where we can make some real money. I mean, I was talking with Matt about this off camera, and he's like, yeah, you could get into all these junior silver miners, or you could just take a buy call options on like SLV. And I'm like, yeah, you're probably right. The thing is with the call options is you got to pick an expiration date. You know what I mean? Like eventually the thing is going to expire worthless. If you buy some of these junior miners, well, I guess they could be worthless, but you don't have the expiration date on them. So, and it's also kind of fun to follow the story. You know, there's nothing like when you just get a multi-bagger and you actually, you know, pick out the right one. It's pretty cool. But it's also fun with options as well. So whatever floats your boat. Okay, now PSLV. This is physical silver on the stock market. So just like PHYS is physical gold, this one's physical silver. These are the levels I like. So just the levels that are rattled off there will be about, oh, I need to move this one up. This one should be at 1125, ninja edit. There we go. Close enough. All right. So first limit order 1240. That one's probably going to hit. And it might even hit next week. So if you want some silver, you need to get your limit orders in 1240, 1175, and then 1125 right here for your stink bid. So that's the one we're hoping. If silver gets down to 33 bucks, that'll be about the level that it'll hit on this fund. So that would be the one to get. And SIL is up 3.9% for the week. So this is the Global Silver Miners ETF. So we got a lot of wheat and precious metals in here. A lot of that one. I like this one a lot. If you got an itchy trigger finger, you could get it right here on this upward channel trend line. But I like better 47.50 and then 43 bucks and then $40 right down here on this upward on this rising 200-day moving average for SIL. Okay. And SILJ is up 3.6% for the week. So basically same thing here. I could draw pretty much the same trend line just about on this one, right? It's a little more perfect on SIL. You could get some there, but I like better 14.50, 13 bucks and 11.75. Oh, I need to move that one up too. Okay. Well, all right. I'll keep it right there for now. Next week I'll move it up, but it's not going to get there next week. If anything, this one will probably hit. That'll line up pretty good with this 50-day moving average if it drops down below there. All right. And our favorite silver company, Pan American Silver. Pan American Silver up 3.7% for the week. So this one is pretty interesting here. So we've got I got a question like, was this a bull flag? I go over a bit of this in my technical analysis series. I would say generally no, and this is why. Okay, so we got the pole right here, and then essentially you kind of want the flag going out like that, right? Well, really what you want is you're going to want this to be, let me get the undo, there we go. You want this to kind of be like a 90-degree angle, but it can't go further than 90 degrees. So in other words, it can't be like 100 or 105 degrees, and you don't want it to be less than 45 degrees. So, you know, here's your pole right here, right? I don't know. That makes me a little less certain. You know, when you start drawing lines here that's like, oh, well, I'm not going to count that price action. Yeah, well, there's days where it closed above that. You know what I mean? So, in my opinion, no. I want to place bets that are at least 60%. You know, and I don't really see that here. We got too much price action that's up on the other side of that. On top of that, we're kind of in the upper part of this parallel channel that's just been obeyed for over a year, and I would prefer to you know, kind of wait for that. Now, that being said, we do have some, you know, this could be bullish consolidation, especially if silver holds up. If I'm wrong and silver does not correct back down, then you're probably hitting 28 bucks here on Pan American Silver, and that's it. Yeah, I like a limit order at 28, 25, 75, and then a stink bid down here at 22.50. Alrighty, and moving on to copper. Paging Dr. Copper is up 3.2% for the week. So kind of some stretched technicals right here. Pretty stretched. So we have the 50% copper tariff comment by Trump, and copper shot up, formed a bit of a pennant here, and then went up a little bit more. This is looking pretty stretched to me. I don't know that it has much room left in it. I mean, there are some little cup patterns here, but a lot of this is played out. RSI is all the way up at 70. MACD is way in the clouds. Hasn't quite started to roll over yet. I mean, we haven't seen the purple cross the yellow down there yet, but it looks like it's going to. I would be pretty surprised here if this continued up to like 650 or so. I mean, there is an argument for it. If you take this pennant right here, okay, so see how it's kind of like a pennant like that. It's like a bull flag, but it's more of a point than it is, you know, a flag pattern. So if you take that and then you take your handy dandy little measuring tool here and you measure the pole up to the top, and this is where it gets kind of iffy because see, that kind of had a real spiky peak up there. If we took it a little more conservative and went like that and then measured the breakout, that would put us around just south of 650, something like that. So it definitely is possible on the charts. That could definitely go there, but I just wouldn't be able to bet that. I mean, you're really going to buy something when the RSI is 70? Like that's when alarm bells should be going off in your head to sell, you know? Okay. So copper for next week, no bets here. My money would probably be more to the downside. After seeing come Monday, Tuesday when I was talking to Peter, I'm like, oh, this thing's going up. And then it just hit that. Look at that reversal bar right there. Okay, see that one right there? That does not look bullish. That looks like it's going down. And that's exactly what the price did the next day. All right, and COP.U is up 0.6% for the day. Let me zoom back out here. So calling this the 14% arbitrage. If you just set your limit orders here for $7 and buy at 7 and then sell at 8, you can make a little money. It looks like someone beat me to it because they had their limit order here set for 701. So I'm going to outsmart him. And now I got mine set for 701. Maybe I need to up it to 702. Anyhow. This is basically buying physical copper on the stock market. I like this one a lot as a little trading vehicle. Now, if you look up the spot price of copper and then you go to their website and you look up what it's actually trading for on, oh, darn it, what's it called? Here, I'll just show you. Boom, there we go. Okay, so this is the Sprott Physical Copper Trust, and they're just they're just storing copper, and somehow they're doing it for only 2% a year. So this isn't like a buy and hold thing. This is something that you need to kind of this is, I think, more a better trading vehicle than it is like a buy and hold for retail. But you're technically buying physical copper here at a 20% discount. So $1 worth of copper is only costing you 80 cents. But you just saw the technicals on copper. I mean, a 20% sell-off in copper would, it's going to bring you back down. Well, I'll just do it for you here. It's going to bring you back down around here, just south of $5. Peter seems to think he doesn't think it's going to go past 5. I hope he's right. We'll see. I would like more copper. So if there is a pullback to $5, I'll probably enter some more copper equities. All right, and COPX. So the Copper Miners ETF is up 3.1% for the week. Hit up here. I drew this white line as just resistance. This isn't a profit-taking zone at all. I haven't sold any copper equities that I can recall, unless there was a bad. Oh yeah, I did. Sold Arizona Metals. That was a copper company. But since then I haven't sold any copper equities at all. I'm basically buying, and the plan is to buy on pullbacks and hold this one. Hold any copper equities for the next probably 3 to 5 years, possibly even 10. I think we're going to have an amazing run in copper. The world needs more electricity, and you're not going to do it without copper. So anyways, buy zones on this one. I moved this one up slightly by 10 cents here, $43.60. And the reason I did that was because you have one bar right here, and it hit at 43.57. So if you got it at 43.60, if this comes in for a double bottom, which it kind of looks like it might, then at least your limit order will hit. So got that one. Next limit order at 41.75, and then 38.50 for your stink bid. And COPJ is up 1.7% for the week. So still kind of putting in a bunch of little all-time highs here, just bumping up. This is a pretty small fund. I mean, on Friday here, there was only 7.6 thousand shares that traded, and this is only trading at $26. So, not a huge amount of money is going into this thing. But, a lot of junior copper miners, and that's the way these funds start, is they start, with almost no money, and then people put in and it rides it up. Getting pretty stretched here on the technicals. I'd like to see copper correct down, and then these equities come back down to some of these limit order levels, 23.75, 22, and then 19.75 for this one. And Freeport McMoran is up 0.2% for the week, so the best copper miner on the planet. Looking like this one's probably going to retrace back down. You do have a skosh, I repeat, a skosh of support at $43.30. That would line up right here for a triple bottom, and it would touch right back here. So that's interesting. But there is a big gap right here, and as the saying goes, usually gaps fill. So this one's probably no different. So I got the first limit order set at 41.75, anticipating that gap will fill, then 38.50 and $34. Neil, thank you for the donation. Again, you are a gentleman and a scholar. He says, Steve, thanks for answering my question. I wrote down your answer for future reference. He says, your limit order comments have helped me make some money. So you are welcome. Thank you, Neil. Love doing this. This is a lot of fun to me. I like making money, and I like helping people make money in the process. I want to grow my finances just like you. And I found these red, yellow, and green lines. They just seem to work. They're easy to follow, and if you stick to the program and, you buy 15% of your position here, 35 there, and 50% there, you don't always get them to hit. But when they do, man, you get in the black really quick. These yellow and green lines, we had them set throughout this whole thing, and we started getting into this one a couple of years ago. And it's just like we're psychic, just bottom picking this thing. You know what I mean? It really, really works. I like it a lot. So thank you for the feedback, Neil. Thank you for the donation. Let's move on to uranium is down 0.1% for the week. So coming back down here into the low 70s, overshot a little on the Sprott Physical Uranium Trust news, I think, is probably what drove that up. Great to see it retrace just a little. The equities, though, Sprott Physical Uranium Trust is up 2.7% for the week. So we just added another 100,000 pounds to the Sprott Physical Uranium Trust. It is up to 68.3 million pounds. Now, the discount isn't fantastic anymore. It was at, I think, 8 or maybe 8% last week, maybe 9. Now it is at 4.7% discount, so not a fantastic discount anymore. I'm getting a lot of questions on uranium, which is usually kind of the tell, like, hey, we should probably start trimming. You know, once I start getting a whole bunch of emails on it, I'm starting to see the rocket ships on Twitter, which is also usually another sentiment indicator that, hey, maybe it's time to sell. So I don't think, I'm not going to sell any of this Sprott Physical Uranium Trust just yet. I was talking about it up here, and that's as far as I got. I was just talking, and I didn't actually pull the trigger, so joke's on me. But you know, if you are dying to get into the uranium sector and you just cannot wait, this is probably the smallest mistake that you'll make is right here. If you can come in for a double bottom right on here, buy physical uranium. That's how you want to start with these commodities. You want to buy the physical stuff first. So like when you start off in silver, you buy the physical silver first, and then you get into the stocks of silver, right? You get into like Pan American Silver or some of the juniors I talk about in the newsletter, right? This is how you start in uranium, is you get into the physical uranium fund first. That's going to be the least volatile, and it is plenty volatile. I mean, look at this thing. This is just a monumental run. Sell a bunch, start buying some more, and on this next run, we're going to sell it again. So if you're dying to get in, which I know a lot of you are because I've been reading your emails and your tweets, this is probably your like best bet right here. Come in for a double bottom right here on SRUUF. I don't know, somewhere around 630, 650, something like that. I'm sorry, 1630, 1650. All right. And URNM is up 1.9% for the week. So we got our take profits line up here, next take profits at $53. Not super scientific. See, it just lines up right there, and got some price action back there. But those are the two main ones right there. And almost back here. I really wouldn't fault anyone for selling some now. The sentiment is just looking uber bullish. And, you know, if you want to move to past the point of concern again, for the second time, run it. You know what I mean? Like I think we I got mine set for 53, but I may be pulling the trigger next week. We'll see. You know, I'm trying to squeak out another like $3, and I might be just getting a little too greedy here. I mean, RSI was at 71, just rolled over to 66. It looks like we're going to get a little correction in these things. You know, as the spot price has been going down, these equities have been going up. And I think that's going to reverse. All right, and URNJ, so the same ETF, but with the juniors, is up 3.2% for the week. Same thing here. I think we need to be looking at profit taking. You know, you don't have to sell your whole position, but at some point, you got to pay yourself, you know, and, you know, a lot of you guys got in down here. These arrows can be a little deceiving, you know, but like I said, with the green, yellow, and red lines, as you get closer, these are the biggest bets. So, you know, you're up quite a bit here. Let's just do a little retrace here. What do we got? 90%, okay, in 3.5 months. At some point, you got to pay yourself. You know what I mean? So there is quite a bit of price action around where we are now. Maybe a limit order for like $23, $24. 24 might be a little high. Might hit. Yeah, $23.50, something like that, limit sell. All right, and Uranium Royalty Corporation is up 18.3% for the week. So they did some financing. They got, I think, an extra 150 mil that I'm sure they're going to spend on a royalty, or maybe some physical uranium. If they could get some cheap uranium, that'd be pretty cool. So I sold about a third of my position. So usually when they gap up like that, you know, it usually has a retrace. Maybe not. Maybe this is a new level of the stock, but you got an RSI of 76, right? And when an RSI is at 70, alarm bells should be going off in your head like, hey, Turbo, maybe you need to take your foot off the gas here. You know what I mean? All right. So $3.10 is where it closed. The next resistance that I see is going to be lining up with this one right over here, which is around 365, 370, maybe as high as 375. that could be your next level for profit taking. Okay. And Hot Beef Sandwich says, Steve, I love your show. I'm a noob in the markets. I watch mostly you and Soloway. I love learning all these technicals. I've come a long way in 5 months and I'm loving it. Glad to have you, sir. If you like charts, then you will humor me here with a quick commercial. You got to check out our technical analysis series. So people have been asking how to get it. There's a link down below in the pinned comment. Or you go to the website, stevebartonmoney.com, on the homepage here, and you scroll down, and I'm even pointing at it. Look, technical analysis series. You claim here, and then we go right here to the technical analysis for beginners, and it's a total of 10 videos. We've gotten a lot of positive feedback on it. Some of the reviews here recently by William, excellent. Once I saw this course was available, it was an instant purchase. Just like all the content Steve produces, it is exceptional. Whether you're a beginner or looking to update or review your knowledge base, it's much more than worth it. I wish I had this the first time I started TradingView. Thank you, Bill. And Anonymous says, hi, Steve. Just wanted to say thank you. Your technical analysis for beginners was incredibly helpful. The way you broke down the concepts really smoothed out the learning curve, and the insights you shared played a big role in helping me shape my own trading strategy. Great job putting it all together. Thank you, guys. I appreciate the reviews. And this will be the last week that it's going to be less than $50. It's $49 right now. This time next week, we're going to up the price. So if you've been on the fence, now is your time. And also, if we go back to the website here, this is how you sign up for the newsletter. So you go to the website, stevebartonmoney.com, and right here, this is our free weekly newsletter. Just type in your email right there, and make sure you click this little box right here, I want to subscribe to your mailing list. If you don't click that, then it's not going to work. It's called a double opt-in. But anyways, you got to click that and then hit subscribe, and that's how you sign up for the newsletter. So thank you, guys. Appreciate your support. I think we may be going to Substack for the newsletter. You guys won't notice anything. You'll still be getting an email. But basically what it'll do is it'll allow us to put videos in the newsletter and have a free version and a paid one for some of the junior companies as well. All right. And where are we at? Oil is down 1.4% for the week. So it looks like we have got a bear flag here that played out. So we've been talking about this bear flag for like ever, or 3 weeks. And this is the bear flag right there. And see how it broke down and broke out of that channel right here. So break out, or break down, I guess should say. And if we measure the target and just do the pole again, like from the top of the pole down to the bottom and then measure it down, we could actually get down to 51 here is what it's showing on the technicals. I personally don't think we'll get there. I think we're probably going to have a hiccup around $60, and if we're lucky, then oil might get down around 55. So how do we make money from this? This is how I think we do it. XLE is our favorite oil and gas ETF, is up 1.3% for the week. And if oil breaks down like I think, then this ETF should break down as well. If the underlying price of the commodity that these people are these companies own goes down, then their share price should go down, right? So right here, first limit order, 84.50. I thought that would hit last week, and it got close. It got down to 84.89. So got within, 39 cents or something of hitting, never quite hit. Could just place a bet right here on the 50-day moving average, which would be around, We just look over here for that, 85.43, call it 85.50. But I think oil is going to break down even more, and I think these limit orders, possibly even the yellow and green ones, will hit. So 84.50, 81.50, and 79.25. Oil can move quick. And get your limit orders in and set. That way, when you're at work or, you're out having dinner with the family or something, or lunch with the family or whatever, and these things hit, you don't have to be in front of your computer. All right, and XOM is up 2.4% for the week. So hit right down here on I had this at 108 per share, first red line at 108 for Exxon last week. I moved this down slightly to 107.50, so I adjusted slightly down. If this comes back down for it, I think it will. I mean, you got the 200-day moving average. You have an underlying commodity that looks like it's going to get cheaper, right? I think this 107.50 will be child's play here coming in. I think we're getting down here to like the 105, 103 level again. So limit orders, 107.50, 103.25, and then a stink bid of $100. And Blackstone Minerals is way down in the last couple of weeks. So we had a little sell-off here, kind of a waterfall sell-off. It looks like what's happened is with oil being cheap, these guys are an oil royalty company. So as drilling rigs start shutting down because they're not as profitable anymore, these guys aren't getting paid. Their dividend is decreasing. So it was 37.5 cents per share. Now it's 30 cents per share. I'm kind of undeterred. I think these guys are going to do really well. And it looks like to me, this is a bear flag forming. So maybe some people know what's coming up here with earnings, and we're going to get a little drop off sell here, and we can do our handy dandy measuring target here. Let me just move this down. And if we take our little tool, we'll take that to that, and then we string it back down. And if, let's say it broke out right there, that could put us down south of $11. So if you want into this, I mean, the risk is this thing just keeps going down. I guess that kind of goes without saying. But I like $12 and then $11 right after that. Last week, I did some chart analysis in the Rule Classroom. It was a lot of fun. We had over 250 people watching as we were doing it, and basically pulling up everyone's questions and going over it. So you can catch the replay or join us for the next one. You can join the Rule Classroom for free. There is a link down below. Or if you're ready to take the next step, try out the premium version for my favorite price, free. You can try out the premium version free for 2 months. There's no obligation. Cancel anytime. And after that, it is $39 per month. Last week, Adrian Day did a presentation on private placements, kind of red flags, stuff to watch out for. So if you are curious about private placements or anything like that, it's definitely more advanced in the Rule Classroom Plus in the premium version, but it's a lot of fun as well. And there are some serious investors in there, some really, really highly intelligent people that you can bounce questions off of. All right, natural gas is down 12.8% for the week. So broke this little, I'm calling it what happened to my screen? There we go. It broke this little kind of baby trend line. And I call it a baby trend line because we only got 3 points. We got one here. I mean, I guess you got a few days there, but we'll just count that as 1, 2, and you need 3 points to make a trend line, right? Because anyone can draw a trend line between 2 points. That doesn't mean squat, right? You need at least 3 to establish some kind of trend line, right? Okay, so we got 3 there, but it broke down. Broke through that this last week, down quite a bit. Looks to me like it's probably going to go lower. Next level to catch it, I would guess, would be around here about $2.95, $2.90, somewhere in that ballpark. Also, this may be forming like a little baby kind of bear flag. Let me get rid of that trend line so you guys can see it. And it needs a little bit more time here to kind of, I don't know what you'd call it, I guess mature. But if we draw it here, maybe you can see it. We'll go here and then like that. Needs a little more time to go. Now, if we go out to the hourly, kind of looks like it's already there, right? Let me undo that. And well, okay, hang on. I'm getting all over the place here. There we go. Reset the chart, move here, go to hourly. There we go. All right, so you can look at these at different time frames, right? You know, especially if you're a day trader, you should be looking at the hourly, 30-minute, and then the 15-minute, then the 5-minute, then the 2, then the 1, and then you can even get down to the seconds. But got the pole here and flag. Okay, we want this flag to iron out a little bit more though. We want a little more price action on this, to kind of feel comfortable that it's actually moving to the downside. Okay. All right, and Devon Energy is our favorite natural gas play, up 0.3% for the week. So I think this is a buy now. But I also think it's going to hit $32 again. So if you're patient and you like to pinch pennies like the host of this show, I think $32 is great for a limit order, then $30.50, and then $27.50 for your stink bid. And coal thermal coal is up 4.3% for the week. Met coal is up 1% for the week. Now, we did our interview with Matt Warder, and he basically said that looks like we're kind of hitting a high time right here in met and thermal. Probably going to go into shoulder season down here in October, November, and then back up again. So it looks like we're kind of hitting the high prices here in coal. So if you have some coal equities that have had a nice little run, we went over some. If you check out that episode, it was... who was it? It was Warrior Met, Alpha, and Core Resources had a nice little run. So he had taken some profits. Also, I think in BTU. So if you're a trader, might be time to take a little cheese off the plate. All right, and the coal ETF is up 7.1% for the week. So I didn't think it would break this 200-day moving average, especially not with that bearish bar on Friday, but I was very wrong. Shot right above that on Monday and didn't stop. Looks like it's coming back down for a retrace. So this is actually kind of cool. I mean, your RSI is 72, MACD's way in the clouds, but if this were to kind of grind sideways here and come down to the 200-day moving average, you could have some bullish consolidation here to the side, as it comes up to meet it, which might make for a neat entry point. But yeah, so far I still got the same limit order set here at 1775, 1670, and $15, but I might have to move those up depending on what the price action looks like next week. All right, and platinum is down 2.3% for the week. So second week in a row that it's been down. I don't even know what that's like anymore. We got so used to this thing just shooting the moon. So probably going to continue to get a correction. This looks like is a little bit of a topping pattern. I would be kind of surprised if we're higher next week. I think we'll be lower again next week. But we'll see. Palladium is down even more, down 3.7% for the week. So had a down week in Palladium as well. Looks to me like it's going down next week. So I would be surprised if this went up the following week or next week. And SPPP is down 2.8% for the week. So this is a very easy way to bet on the stock market with both metals. This is kind of like PHYS and kind of like PSLV, except this is SPPP. And it is both platinum and palladium. So after 2 years, finally moved the lines up here. So we're now at a limit order of 1125, 1050, and $9.50, which will probably not hit. I'd like to see this come back down here to the 1125. I don't think that would destroy anything with the narrative. And technically, it would line up with some pretty good support right there. So I like that one as a limit order. Now, this is a little tough. Well, let me go to the weekly here, and then you can see. So not engulfing, but, that was a pretty bullish bar there, kind of a bearish bar there. But it is bouncing right here on the 20-day moving average. So I don't know. There definitely no buys now, but I do like this 1125 for a first order. And this is just to kind of show you where we are in the overall theme of things. If we zoom out here on platinum divided by gold, we can see how historically cheap platinum is compared to gold. Way down here at this end of the chart, this is where platinum is expensive and gold is cheap, and this is where platinum is cheap and gold is expensive, right? And then same thing here, platinum divided by silver. Silver's expensive compared to platinum. Silver's cheap compared to platinum, okay? So, oh, wait, that's wrong. Silver's expensive compared to platinum. Silver's cheap compared to platinum. Okay. All right. So we want to be buying down here and then basically trading platinum for silver up here and vice versa for gold. All right. And where are we? Bloomberg. The Bloomberg Commodity Index is down 1.6% for the week. So maybe future, will tell. But this kind of looks like it's ironing out what could be a giant cup pattern. I'm a little curious here what the retracement is on that. It's not perfect, but it is in the 50% zone. So this could line up to be like a cup and handle that may take another year or so to form out. That would be interesting. Maybe another year and a half. As far as zooming in and what's going to happen next week, I kind of like a buy now. Okay, so this is coming down right here to this trend line. So 1, 2, we'll call it 3, 4, and coming up on the fifth one, a little loose right there, kind of in there, but basically hitting right on the 50-day moving average, also on the 20. Yeah, I kind of like this as an entry point here on the Bloomberg. And nickel futures up 0.5% for the week. So just kind of sticking around this $15,000 per ton mark. I think we're getting close to a re-rating here, although I've thought that for the last year and just been wrong. How do we play this? You can play it with the nickel ETF, NIKL. This one is up 3.9% for the week, so got a golden cross here. I don't see any buys now. I put in some new lines. I adjusted them up just a little bit, so we got $11, $9.50, and $7.50. This one is probably a pipe dream. We're going to need some kind of liquidity crisis to get down there. I don't see any buys now, but I like 11 bucks quite a bit. That's right around this 200-day moving average. And our favorite metals and mining ETF, the PIC ETF, up 2.9% for the week. So looks like we're coming in for a correction. So this ETF has BHP, Rio Tinto, Freeport, and Glencore. This is great for your guys' retirement accounts. You know, they're probably not going to allow you to buy Glencore in your retirement account. If they do, wow, that's amazing, and do it. But they, most of them probably won't. But a lot of them will allow you to buy these ETFs all day long. So this is where you can do it, and Glencore is a decent position in there. This looks to me like we're going to roll over. This kind of looks like an island reversal right here. See how we have this gap? So usually when you get these, this will kind of gap down and it'll be there like on Monday or Tuesday. So we'll see if that actually plays out or not. But I would not be buying here. But for limit orders, I like around this 200-day moving average, $37.50, 35, and then 33. And Bitcoin, as of this moment, is up 0.2% for the week. So let me go to the weekly here, and you'll be able to see this a bit better. So on the, there we go, go back to that, there. So on the weekly here, let me get rid of this, and then I'll pull it back so you guys can see. Okay, right here, this weekly candle, or bar, let me put it to candle, might be easier to see. That's a bearish candle. That tells you the price is going down, and that's exactly what happened this week. The price went down. I still think we got more likely, I think, downside here than we do for up. So first, let me go back to the daily now. And if we look at this, some might say this looks like a bull flag, and it kind of does. But see how you got this one candle right here that's just kind of like just sticking out like a sore thumb. You know what I mean? I don't really like that. So I would err that this is probably not necessarily, although that is a pretty bullish looking candle there. Now, I'm leaning more towards downside than up, and let me do that extension again so that I can show you guys. And where is my little Fibonacci extension? It's up here. Okay, so we're going to just do this short-term one. So we'll go down from here, up to the top, back down. I go over all this in my TA series and just stretch it over. And you can see that this has, and this is where there's a little bit more of an art than a science. Do I stretch the bottom down here to like that bar or this one? Okay, so it's going to affect our levels a little bit, but you can see that generally speaking, the price action is kind of hitting around these levels, the 50%, the 61.8. The upside on this would be up here to the 78.6%, around 128,000, somewhere in that ballpark. But looking to me like it's going down. So I think the next like kind of level of support is going to be around, what's it say, 112.7. So we'll call it 113,000 to the downside. I think that's probably more likely next week than it is to be up. All righty. Well, I hope you guys got something out of that. Thank you for always being here. Love you guys. Go to stevebartonmoney.com for more and have a wonderful day.